Chapter 9. How much imaginary gold has been sold? In order to put into context how much imaginary gold is out there, first let's have a look at how much real gold is in existence. According to the World Gold Council, at the end of 2008, almost 163,000 tons of gold existed above ground. That is about 20 grams of gold for each person alive today. The London Bullion Market Association monthly reports the net gold traded on a daily average on the London over-the-counter gold market. The numbers reported here are not the gross trading volume. So, for example, if an investor were to sell 1 million ounces in a day and then on the same day would buy 1.1 million ounces, the trade would be counted as 0.1 million ounces. In November 2009, in London there were 21.5 million ounces of gold net traded each day. That is a daily trade of almost 610 metric tons of gold. When we conservatively assume that the gross volume of gold traded in London is 4 times the amount of net traded gold, and the chief executive of the LBMA has stated that it could well be 5 to 9 times as much, the average amount of gold that traded in 2008 on a daily basis should have been 89.2 million ounces or 2,774 tons. So if most of the trading on the LBMA is spot, let's conservatively put this percentage at 70%, and we can estimate that the daily spot volume of gold traded in London is about 1,942 tons. If we assume that the LBMA reported trades account for 91% of the world's total, then the gross world average daily turnover of gold in 2008 was 2,134 tons. If you consider the aggregate amount of all the gold mined worldwide in 2008 and all of the scrap gold recycled that year, these two sources only amount to less than 15 tons of gold supply per working day, or less than 0.8% of daily spot gold turnover. Indeed, all the gold mined and recycled in a year represent less than 2 days of spot trade in London. On the London gold market, it is prescribed that gold changes hands in the form of so-called London good delivery bars. And Paul Mylchreest has estimated that there are 15,000 tons of gold privately held in the form of these 400-ounce London good delivery bars. This means that in London alone, almost 13% of all the London good delivery bars in the world have to be turned over on a daily basis to support the trades. This means that the entire pool of London good delivery bars available in the world on average turns over every 7.8 working days. When compared to the daily turnover of stocks relative to the market cap in liquid markets, or a currency like the pound sterling relative to M4, the percentage of London good delivery bars that have to be turned over in order to support the current gold trading in London is, even when conservative estimates are being applied, way out of line. This level of trade in London good delivery bars of gold relative to the estimated pool of gold liquidity is excessive and doesn't pass the smell test. For we have to remember that the purpose of buying investment gold is to store wealth. In order to do so, gold has to be held a long time using a buy and hold strategy. If gold is bought and traded quickly, it would destroy wealth, not store it, because there would be a large loss due to transactional fees. But the turnover of every single London good delivery bar in 7 days can hardly be the characteristic of a market that is supposed to be selling a buy and hold product. About 95% of the trading on the London OTC market is by the way of gold that is held in unallocated bullion accounts. trades in the form of unallocated gold are nothing more than paper claims on a general pool of gold in a vault, as we have seen. The excessive amount of gold trading relative to the likely pool of available gold bars, conforming to London Good Delivery Standards, seems to indicate that the wholesale gold market has evolved into a fractional reserve credit-based system instead of a market where gold is physically transferred. So Mylchreest has estimated that there can be only about 15,000 tons of London Good Delivery bars in the world. Let us assume that the London OTC market holds them all. Now let's compare how much of the inventory of the precious metal exchange traded funds are traded each day to get a good idea about how frequently investors trade something they have bought as a store of wealth. The most liquid and highly traded ETF is GLD. GLD has 325 million shares outstanding, and the fund trades on average 11.9 million shares each day. This means it trades one share each day for each 30 shares outstanding. The GLD ETF is a way of buying, holding or selling unallocated gold. One would expect the investor's behavior in this ETF would be similar to those trading the unallocated accounts on the London OTC market. If the investor trading mentality on the London OTC is similar, then 2,134 tons should be 1/30th of the gold stock held by the OTC. However, because the OTC is restricted to wholesale traders only and has a minimum trade of 1,000 ounces, whereas using GLD the minimum trade is a tenth of an ounce and trading is open to everyone, it is likely that London OTC participants would turn over a lot less than 1/30th of the entire gold inventory in a day. But when conservatively using the same inventory to daily trades ratio as GLD, the London OTC market should be holding 64,000 tons of gold in its inventory. But Mylchreest estimates that the OTC can hold no more than 15,000 tons of gold, because that is the entire global stock of GLD bars. This means that each ounce held in unallocated bullion accounts on the London OTC market has at least 4 owners, and this is a conservative estimate. I wouldn't be surprised if it is more likely to be as high as 10 or even 20 owners to every ounce, particularly when the banking world has used a 5 to 10% reserve ratio with fiat money for a long time, and bankers are, like people, creatures of habit. So it's likely that between 45,000 and 135,000 tons of unallocated gold have been sold to the market that don't exist. And there's a second calculation method to use as well, which can be used to estimate how much non-existing gold has been sold. In 1995, the world stock of real gold metal was 140,000 tons for about $4 trillion of money stock. Let's assume that the amount of imaginary gold was small at that time, as this was before US Treasury Secretary Robert Rubin's strong dollar policy. If the price of gold had remained at $400 an ounce, the gold stock would have to match the rise in the dollar stock and had to be 525,000 tons. But the price didn't stay static, it went up 150%. That's an increase of 2.5 times. So the gold stock would be 140,000 times 3.75 divided by 2.5 is 210,000 tons. The gold stock actually is 160,000 tons, and the difference between those two must be imaginary gold, which is about 47,000 tons. So in conclusion, we can estimate that around 50,000 tons of imaginary gold have been created, and compared to the stock of real physical gold that has ever been mined on the face of the earth, this is about 30% of that total. And to be honest, I think this is a very conservative estimate of that total.